Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Tuesday, November 15th, 2022. Before I jump into the charts, I just want to please encourage you to click like each and every time you watch the daily Tesla report. It does help us out a great deal. It sort of skews those algorithms positively so that we're found more easily on YouTube when people search for daily Tesla or Tesla analysis. We're also doing the daily Apple report also. Tandem, the two of them every single day. So you may want to subscribe to the Wicked Stocks channel if you haven't already. It'll apprise you notifications each and every time new content has been uploaded. And, please share the content, if you would, with friends and colleagues. That also helps us out a great deal. So let's start with this chart here. Just a reminder that last week we dipped into this targeted zone of long-term support. Had been an objective since early October following a sell signal that you can see on this downloadable newsletter, by the way. This is free. You can download this just below the screen. You can see a place where you can download this newsletter and click on the charts. It'll take you to the respective areas. But it had been a target, the 171.57 to 179.97 area. This band of channel support had been an objective since early October. We tested it last week, and now that we've done so, the market prone to bullish continuation, to recovery. Now, at this point in time, I think 222.37, a realistic 1 to 2 week objective. And by the end of December, 253.68, this new descending 1/3 speed line, which is more of a midterm resistance area that can contain monthly, possibly, buying pressures into January of next year. And I'll get to that in a moment. So this is still the big picture. And let's take a closer look at that and jump to this chart. There's a lot to be said here. I know there's lots of lines. So if you look at the support and resistance to the right, I still have 196.66 to 198.58 as our area that can contain daily buying pressures. We rallied to inside of a point on Monday of 196.66. The high was 195.73. And this area, 196.66, is sort of a gap that would be closed if tested. It is this low here from last week, and our rally back failed to actually retest 196.66. We gapped lower the following day. So it's a gap to close at 196.66, and 198.58 is the mid-October low. So this area, yes, can contain daily buying pressures, and yes, below which we can fall back into this meaningful zone of support. 171.86 to 180.26 is the weekly chart all week, but on the daily chart, those descending channel bottoms come in at 171.57 to 179.97. So that is the sort of the 3 to 5 day outlook. We can grow heavy below 196.66 to 198.58, and we can fall back to 171.86 to 180.26 within the week quite easily. In fact, possibly today. Just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. If we break this simple rising trend line off the last 3 days lows at 188.06. So 188.06 is our pivot point for the day. And if we break or open below it, we should test 179.97. Now I have it 180.26 here on this chart because it's the weekly chart level, but on the daily chart, it's 179.97. So if we break or open below 188.06, 179.97 in reach, the start of a wide zone of long-term support down to 171.57 that can contain selling into the first quarter, and above which the market is inclined to recover into the first quarter. Upside. Now, I'll cover this in a moment in terms of what if we close below 171.57, but I'm just not going to go there this moment. Upside, because I'm expecting an ultimate violation of the 198.58 level. If we push or open today above 198.58, we could, by the closing bell, reach this 210.69 former rising channel bottom, just an intermediate channel structure that, if tested, can contain session strength. On the way up, we have minor points at 202 even, 204.99, and 207.26, all well suited for aggressive day traders. But if you're looking for a trade of the day, it's still, you're selling the 196.66 to 198.58 area, allowing for a return to the upper 170s. possibly on an intraday basis. And while I'm at it with regard to the trade of the day, you could include 188.06. Buying it perhaps, anticipating 196.66, and selling it perhaps if we break it, anticipating then 179.97. If we close today above 198.58, we're just about 2 to 3 days, 3 to 5 at the most, from reaching what is considered a targeted zone of resistance. This is our 1 to 2 week objective between 216.80 and 222.37 that can absorb buying into next week. And from here, we can fall back within a week or two into the 171.57 to 179.97 area, which I can once again show you. This is the weekly chart. Little 179.63, 171. These are a little different. I don't know if these numbers, let's go back to, okay, daily chart. That's right. This is the daily channel bottom. All right. So let's cover the possibility of closing below 171.57, which is a long shot today. But if over the next few days, let's say we dip into this zone today because we break or open below 188.06, which would then be indicated 179.97. This zone, once again, I do like to keep repeating myself because I think repetition is important. I'm going to digress just for about 30 seconds here and recognize that the analysis that I put out is not what I call and have often called the paint by numbers approach to trading, where I tell you this is where you buy it and this is where you hold it and this is where you take your profits, point A, point B, your stop loss here, your stop loss there, because I recognize I'm speaking to a wide range of traders, from day traders to swing traders to position traders to options traders, so forth and so on. And so what I do is I paint a picture, and wherever your time horizon, wherever you're most comfortable trading and have been trading for some time, that lines up, and that's obviously you'll know what to do. In other words, if you're like a 2 to 3 week trader, your position trader, you're buying this 171.57 to 179.97 area, anticipating, if you've got long down there, this 216.80 to 222.37 region as your profit taking mode, and perhaps your short setting zone, whether that means buying then 180 out of the money puts that don't expire for at least a few weeks, so forth and so on. So I'm just sort of explaining myself, but let's talk about the possibility of closing below the 171.57 channel bottom. Then we enter another phase of weakness. We have then, I'm going to say possibly by Friday's close, but this thing is pulling away at a pretty decent pace of this 145.62 descending channel bottom. I'll say by the end of next week, 145.62. And over the next few weeks, over the next 3 to 5 weeks, this 121.72 to 133.42 area. So if we violate the significant zone of long-term support to the downside and close below it, I do think by the end of December we can expect this channel bottom where we could bottom out through January, possibly longer, and we'll just take it from there on a week-by-week basis. So let's cover the upside. I'm going to take a look again at this image here, that if, and it's not going to happen today, it could potentially happen by the end of the week, but I doubt it. And we'd have to close today really above 198.58 for us to not only test 222.37 within the week, but perhaps close above it. And if we did, the 253.68 speed line, then likely within a week or two. So I'd mention at the top, and I have been mentioning this for a week now, after having tested this long-term support, that this 253.68 speed line is in reach by the end of December. And you can play that as well. So if you're a position trader who likes to hold for a month or two, you're bottom picking the 170s, anticipating the 240s or 250s as this thing keeps descending into December trade. This would be your profit taking area, maybe a short setting zone as the market could fall off from here again on a longer term basis. Trying to think if there's anything else that needs to be said, and I don't think so. I'll leave you with this reminder. The triple Q, Tesla is a part of it. The NASDAQ 100 does not show a long-term buy signal through Q1 unless it can close Friday above 12,088.10. These convergence speed lines are significant and representative of long-term trend dynamics, below which this index remains prone to falling back, not only retesting this Fibonacci area, but also then some. So keep that in mind. We're not out of the woods yet with regard to the tech stocks. And that is all I've got to say for Tuesday's Tesla report. Is there anything else to say? Please click like and subscribe, and I'll be back tomorrow, Wednesday, with the daily Tesla report.